good afternoon. How are you guys? Welcome to the Hamza Academy and welcome to the first session of the taxation today. Before we start, I would like to have a formal introduction about you guys as well. I want to know that which papers you are opting this time, what papers you have studied so far, and what are you doing? I mean, the job or are you a full-time student? Okay, so let's start. First, we have Miss Anisha over here. Can you please unmute yourself and tell me about yourself?
Hello everyone, can you hear me?
Hello.
I'm Anisha from Mauritius. I work as a fund accountant at Apex Group, and this is not my first time with Hamza Academy. I have already
Mhm.
studied FO and F8 paper with Hamza.
Okay. Okay. So you've already started the FR as well, right?
Yes.
Okay, okay, okay. And you must have been studying the FR from Sir Abu Bakr, I guess.
No, no, it was from you.
It was from me? Okay.
Yes,
Okay. Okay. I actually like no, I don't remember the name. Anyhow, welcome back. Welcome back. Okay,
yes.
surprise,
Actually,
surprise.
it was last year. Yeah.
Ah, okay, 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 okay. Okay, okay. So welcome back again to the tax as well. Okay, good to see you back. And this is the first time you're opting the attacks, right?
Yes.
Okay, 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 okay. Well, welcome to the board. Now, the second one is Joshna, if I'm not wrong. I'm pronouncing it correctly. Can you please tell me about yourself? Joshna, can you hear me? Okay. Meanwhile, we get a correction with Joshna. We have this one. This is Omes. I'm sorry if I pronounce your name wrong. I guess this is Omes. I can't hear you. Uh, you have unmuted yourself, but I cannot hear you. I guess there's something wrong with your mic. Uh,
Hello?
yeah, Miss Joshna, I can hear you now. Now I just heard the hello only from your side,
Yes,
and now
hello
it's again.
everyone. So I'm Joshna from Mauritius. Can you hear me?
Okay.
Uh, yeah. So I work as associate accountant,
Mm-hmm.
and this is my first paper with Hamza. And
Okay.
yeah, that's all.
Okay. And what about the other papers? I mean, have you attempted some other papers of the ACCA
Oh
apart
no,
from?
actually I did my degree in banking. I got accepted for level one, and now I'm doing the level two, and this is my first paper.
Okay, 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 okay. So welcome aboard. Welcome aboard.
Thank you.
Your JDs are for like the accounts or the finance side you are onto the.
Accounts.
Okay, 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 okay. Done, done, done. Okay. Then we have who is going to this is Omaze, I guess. I'm sorry if I'm pronouncing your name wrong. Omaze, no, I cannot hear you. I cannot hear you. I can see your message, but I cannot hear you. I'm still waiting. Try to work onto your mic. Okay, meanwhile, we have this is Rombid, if I'm not wrong. Please tell me your name. How to do tell me how to not pronounce your name as well. This is Rombid Zay or Zay. Rombid Zay, can you hear me? Okay, we have, I guess, uh, Miss Anisha or Miss Joshna. If you guys can hear me, just type it into the text box that you guys can hear me. Okay, you guys can hear me. Okay, then okay. Omis, you can try to work onto your mic. And Rumbaджay, if you can hear me, you can unmute and you can tell me about yourself as well. Meanwhile, let's just move forward and let's just talk about the paper. And before the paper, you guys must be knowing about my name at least. My name is Qasim Mushtaq and I'm an ACCA member. I became member back in 2009. I qualified my ACCA back in 2007. I've been teaching since 2005 and now this is 2025, right? So it's almost going to be 20 years, not yet. A few months are left in being the 20 complete, right? And I've been teaching since 2005, and this whole the ACCA, some courses for the CFA as well, then the for the local, I mean, if I talk about for the MPhil and the PhD classes over here in the local university as well, over here in Pakistan. Then I've been working as an audit manager as well for one of the audit firms. And it has been a great journey so far. And I have been associated with the Hamza Academy from like around past, I guess, now 5 years. It's been 5 years I've been with the Hamza Academy. And I've known Mr. Hamza from like, personal point of view, as in we were both colleagues in one of the college and we had a very great and good combination, like, when we used to teach over there. So it's been a very long journey with him as well. So this is how now we are onto this online arrangement where we are trying to serve you guys as much as and as better as we can, right? And before formally starting and jumping on towards the course and everything is concerned, remember one thing, the few points that I have to discuss today, and they are after today's class, obviously, once you get enrolled yourself into the paper, a WhatsApp group is going to be created for the facilitation, right? And why the WhatsApp group? Basically, that is the best place where you can ask me the question. You have any query or something. My number is going to be there as well. So you can either drop me a message into the WhatsApp group or you can simply send me a message as well, right? And I'll be more than happy to assist you and guide you because this whole arrangement between us is just to facilitate you guys the maximum that we can, right? And I'm going to be available 24 by 7. So if you are a night learner or a night watchman like me who like starts at 30 after 11:30 p.m. or 12 a.m. midnight, if you are kind of that sort of a person, doesn't matter, like whenever you are sitting and you are studying, you come across any problem or something, straight away shoot the question to me, straight away send the message, right? Maximum what will happen, if I'm sleeping obviously I won't be replying, but as soon as I get up, the first thing I do is I just like check my mobile. So if I have to reply you via a text message, voice message, or I have to like send any sort of a like message or a video, short video, or whatever, by whatever means I will be doing that as well, right? So remember to ask the questions, because the maximum you ask, the maximum I answer, the maximum the concepts are going to get cleared, right? One thing. Secondly, in the WhatsApp group, I will be sharing the latest. I'll try to get my hands onto the latest exam kit and the book as well, because we all know the Finance Act, right? The Finance Act in the UK. comes out in the March, right? In the, like, in the mid of the March, because obviously because of the tax year that we have in the UK, it starts on the April 6th and it ends on the April 5th, right? As far as the tax year is concerned. And the Finance Act, it just like, for every year, there's a new Finance Act. It comes in the March. So technically speaking, up to March or up till March, we will be studying the basics and we will be studying the the tax rates which are from the Finance Act of 23, right? And the latest Finance Act, as soon as it is out, we'll start implementing that Finance Act into our course as well. Because in June, when the exams are going to be there, you will be tested with the Finance Act of 24. Now, the difference between the 23 and the 24 is just of the rates, nothing more. The concept, the application, the everything is almost the same, right? Only the minor changes are there, and those minor changes are the ones which I will highlight to you, right? And in the exams, you will have a full-fledged, what do we say, as the tax table with you, right? You will have a tax table with you in which you will have the multiple rates from the tax, right, that you are going to use, right? And they will be available to you, right? So you don't have to worry about that. Let me just share the screen and let me show you the table that I am talking about. This is one, and see, this is what these are like, around. I cannot see. Yeah, these are the 5 pages over here. So this is something which is going to be available to you, and this is the tax rates from the June 24 to March 25 attempt, right? For the from the ACC, and these are going to be given to you by the ACC as well, and these are going to be available. So the tax rate and allowances, we have the income tax at the basic rate of 20%, right? And the income threshold is 37,700. Then we have the personal allowance over here for the dividends as well. And then we have the residential status. We'll talk about this one as well. This is the child benefit, car benefit percentage, car fuel benefit, company one, individual, the rent a room, pension scheme. I mean, we have so many rates over here. Almost for everything, the rates are here, even for the VAT, the penalties for the late payment, VAT payments, inheritance tax, and then we have the taper relief as well. Then we have the capital gain tax. So these are the stuff that we have to study. Okay, I'm not going to overwhelm you right now. I don't have to go into the very much details of this tax rates, right? Because we are going to do this once we are onto the track, and we are onto the track towards as far as studying and covering up everything is concerned, right? So don't worry about that, right? Overall speaking, if I compare the tax with the other papers, we have a bit of a lengthy course. To be honest with you, it's a lengthy course. It takes time to cover the course, but the things are really very basic. Okay, the things are basics, right? So you won't be having a bit of a issue with as far as understanding the concept is concerned, because the concepts are going to be relatively straightforward, and you will have the straightforward calculations towards as far as doing whatever you have to do. I mean, as far as for the calculations are concerned, they'll be straightforward, but there will be a bit of extra stuff that you have to keep in your mind, that you have to remember to apply. Don't have to worry about the rates, because the rates and everything, they are going to be given to you in the paper. And then obviously the extensive and comprehensive practice that we are going to do, that practice automatically is going to ensure that we are at the end of the day, we'll just start memorizing as far as the rates and everything is concerned. They'll just straight away gonna be clicking in your mind, and you will start remembering the rates and everything is concerned, right? I'll tell you about on the way as well. In the few starting classes, we will be focusing on to the theoretical area, as in the sense the basics, because I have to build your foundation in the tax. I have to build your foundation in the tax. I have to tell you some basics, because the building blocks or the foundation blocks, I have to lay them in the proper place, and then we'll start building up the foundation of the tax. Now, and when we'll start building the foundation of the tax, automatically what will happen by that, you will get to know that how to apply and what concept is to be applied where, right? And then once we get hold on to some good like the topics or the areas, then we will jump towards the exam kit, and then we'll do the questions from the exam kit as well, right? This is what my approach is going to be. And then on the way, I will keep on asking from your sides, the input from your side, that what do you think that should be done, or if you want to come up with some extra suggestion to, like cop up with the things, or you want to, like change the way or approach, or whatever way you want to have it in the class, we'll look onto it and we'll consider that as well. So you guys are more than welcome. And then secondly, once you get yourself registered, you will be having an access to the portal as well, from where you access the recorded lectures. Whatever notes I'm going to create over here in the class, they are going to be straight away available to you in the portal under the lecture numbers, like lecture 1, 2, 3, 4. As the way you have the videos, these Word and Excel files are going to be there as well, right? So you'll have an access to that particular thing as well. So you don't have to worry about that. Done. And what next? Yes, one thing, reading. The secret ingredient for getting the success in tax, apart from practice, is the reading. At least you should read your book for once. At least read your book for once. I will be providing you the book as well. Try to go through the book as well, right? The reading is really very important because it's going to give you the basic idea. Because the Kaplan book, it has been beautifully designed. It has been beautifully designed, at least for tax, in a way that even if the writer, the author, if he talks about a one single line, he straight away gives the example of that, right? Like, for example, if I say it's a sunny day outside, right? It's sunny day outside. If I say this example, for example, if I say this statement, it's sunny day outside, straight away I'm going to have an example of the sunny day, right? So this is the beauty of the Kaplan. That's why I like the Kaplan more than the BPP. And then again, you have an access to the ACCA Student Hub as well. So you have the notes over there as well. So apart from the book, you can read from the ACCA Study Hub as well, right? Because my students, I mean, from this attempt as well and from the previous as well, they always used to say me one thing, that, like the apart from the practice and everything, reading did really help them in as far as understanding the concepts and getting the idea and whatsoever was concerned, right? So reading is really very important. Okay, remember this thing. Okay, so this is the basics that I have, and now formally going this Rumbi, this, I'm sorry for pronouncing your name wrong. Rumbi, this is, yes, you joined again. Can you please unmute yourself and tell me now? I mean, if your mic is working, or almost if your mic has started to work. Yeah, Rumbi is working now.
Hi guys, good afternoon. Can you hear me?
Yes, loud and clear, loud and clear. First, tell me
Uh,
what's your name properly, how to pronounce your name.
okay, my name is Umbi Zai.
Rumbidzai. Okay, okay, okay. Now I
I,
got to know what's your, okay, thank you.
I'm from Zimbabwe, but I'm currently working in Mauritius and
Okay,
have been exempted for level one course
okay,
A, but I've also written audit. So I'm planning to write tax in June.
okay, okay, done, done, done. And you are working as a what?
I am in accounts.
Okay. So you're mostly dealing with the accounting stuff and all, right? Okay. Done, done. Thank you so much for your introduction. So basically this tax, even if you are working the accounts or you're working the, like the audit side or the finance side, this tax is basically, this is a standalone paper. And basically, if you are residing in the UK or something, and if you have cleared or if you have studied this paper F6, believe me, you won't be requiring any other person to file your tax returns, because this is this much how comprehensively this is covered, right? I mean, if you have studied this paper, you won't be requiring some, like expert to file a return for you. You will be expert enough to at least file for your own return, and you can do the filing or the return of the some other individuals in your family and the friend circle as well. This how this much extent this paper is how, like, it's been covered and all. Right, now let's just go and formally talk about this paper. Let me just open up my Word file, and let me just share the screen as well. Okay, where's the screen? Here we go. Okay. Now, if we talk about as far as this tax or TX UK is concerned, I'll be going with the syllabus first. Overall speaking, in this, we are going to have the UK tax system and its administration. We'll have the income tax. In the income tax, we are going to have the national insurance contribution, that is the NIC. Then we are going to have the chargeable gains for individual and companies as well. Then we are going to have the inheritance tax. Then we are going to have the corporation tax liabilities as well. Then we'll have the value added tax, and then we have the employability and technology skills as well, right? So this is the overall syllabus for if we talk about as far as the tax is concerned. So we have one, two, three, four, five, six, seven major areas over here. And if the seven major areas, and then we are going to have this eighth over here, and then the chargeable gains for the individual and the companies, they are the separate ones. So total, we have 9 areas of the syllabus that we have to cover over here, right? Now, overall speaking, we will go one by one over here. Just give me a 1 second only, just 1 second only, and we are resuming. I am so sorry for the hold. So we were talking about this is the whole syllabus over here. Majorly 9 areas over here. We'll go one by one and we'll keep on, like, talking and discussing and practicing these areas. Now, UK tax system, if we talk about this one. This is overall speaking. In this, if we talk about the individuals, we can have the income tax liabilities. We can have national insurance contribution on employees. Then we can have NIC on employers and NIC on self employed as well. And then we have the chargeable gains over here. And then we have the inheritance tax over here as well. Right? I'm just creating, overall speaking, the syllabus area for the individuals if we talk about, right? And then if we talk about the companies over here, in the companies, first thing over here, we are going to have the corporation tax over here. Then we are going to have the individual companies, and then we'll have the group of companies as well, right? This is from the company's point of view. We will be covering the stuff and the concepts over here. And in between these two, there is a bridge which is called as a VAT. The value added tax that we are going to have, this is going to be in both the individuals and in the companies as well, right? So this is the overall speaking, the complete UK tax system that we have, right? Now, overall speaking, we all know that in all of the ACC papers, percentage is 50%. I mean, if you are able to score the 50%, obviously you are going to pass the paper. Otherwise, it's going to be a difficult situation for you. If we talk about as far as the exam pattern is concerned, we have 3 hours paper. We have a section A over here in which we'll have the 15 MCQs, and those MCQs are going to be of 2 marks each, and total are going to be 30. Then we are going to have a section B. In section B, we are going to have 3 questions, and they are going to be of 10 marks. So technically, this is also going to be 30. And these 3 questions are basically going to be your MTQs, right? So you have the 5 questions, multitask questions, and they are going to be of 2 marks each. And that is something which is going to be your, overall speaking, the MTQ section over here, right? And then after this, we are going to have a section 3 over here, or the section C over here. And in the section C, let me just take it over here. In the section C, you'll have 1 question of 10 marks. And then you'll have 2 questions of 15 marks. So total is going to be 30 over here, right? So this is 30, 30, 60, 70, and then 30. The total paper is going to be of 100 marks over here, right? And the point is in section C, basically these are the structured questions that you have to give the answer for. This 10-mark question is basically going to be from income tax, and these 2 questions, they are mostly from the corporation tax. These are mostly from the corporation tax, or at times, one is from the corporation tax and one is from the VAT or the inheritance tax. I mean, depending upon the examiner, how he likes to go for, like, as far as the testing and everything is concerned, right? And one thing that we are going to have over here is we are going to have our Finance Act of 2024 over here now, because the Finance Act of 2024 is something which is going to come over here, and it will go around with this, right? Okay, right. So these are the sections that we have, section A, B, and C, right? So we have just talked about this one as well. Now moving ahead from forward, from here, let's just start and talk about the purpose of tax. Now, in your opinion, what should be the purpose of tax, or why there is a tax, right? Why there is a tax, or what's the purpose of having the tax around, or what's the need for having the tax and everything? I mean, whatever way you want to turn it around, but long story cut short, what is the purpose of the tax at the end of the day? Now, when we ask about this, number one point which comes to our mind is this is going to be the biggest source of revenue for the government. The tax is the biggest source of the revenue for the government, and obviously, the national budget of every country shows chunk, a big chunk of revenue is always from tax collection, right? The national budget, it always shows that the big chunk of the revenue that you get at the end of the day, that is from the tax, right? So technically speaking, the government's earning, the government reliance, this is always related to, or this is always going to be from the tax point of view, right? Second one is obviously this is the economic factor. And from the economic factor point of view, if we talk about this one, this is simple, that good collection of tax, right? We will be able to control inflation and other taxes, and we will be in a better position to monitor and control the economy, right? So from the economic factor point of view, obviously, if we are collecting more tax, obviously, we will be able to control the inflation because the government will have the amount to spend for the prosperity of its people and for the betterment of the country as a whole, right? So if you have the better amounts with you, you have the better collection, you will be able to do the work better, right? But if you have not a proper collection or something, then obviously you will have a difficult situation where you won't be able to work around and you won't be able to, like, work better for its people and all. Like, for example, we can say that same case you collected a tax of 150 pounds, your expenses are of 200 pounds, so you have a fiscal deficit of 50 pounds, right? So if you collect a tax of 150, your expenses are 200, you have a fiscal deficit of 50. So next time, in order to, meet this deficit or something, you will have to either increase the prices or you will have to increase the tax and all. And by this, eventually, what will happen? You will go into a circular debt, right? And when you go into a circular debt and all, obviously, what will happen in order to meet this deficit? Obviously, you will have to BOROW. You have to borrow these 50 pounds in order to, work around and in order to meet your expenses. Now, so what will happen the next time you are going to increase the taxes, you are going to increase the prices and all, and eventually the inflation is going to hit you over here, right? And similarly, if you are able to collect 250 pounds, your expenses, they are of 200 pounds. So technically speaking, you are into a fiscal surplus of 50 pounds, right? And if you are into the fiscal surplus of the 50 pounds, obviously you'll have the extra with you. Then, apart from the expenses, you can spend this amount for the betterment, for the development of the country as a whole and all. Nah? Obviously, you will be in a good position to manage or to, spend something for your own people or to, bring in some new development projects via which you will be able to boost your economy, and the inflation is going to be well under control by this way, right? Third point, this is a social justice. Now, social justice, social justice is that high income individuals will be charged a higher tax rate, right? And low income individuals will be charged a lower tax rate. Now, you must have observed this in the Mauritius as well, like when it comes towards as far as the payment of the tax is concerned, because this is normally, uh, you know, this is what normally is happening around mostly that in the countries that the high income individual they pay the tax at a higher percentage as compared to the persons with the low income bracket and all, nah? Because the percentage is not the same normally the percentage is not the same, because if the percentage is going to be the same, then the social justice cannot be prevailed, because obviously by that, how the social justice is not being prevailed, because everybody is paying the same amount of the chunk or the chunk out of their income, not the portion of the income which they are paying. So by that, you won't be able to collect the more revenue, and you cannot spend the extra amount collected onto the poor side or the poor people, right? So the social justice is that the high income individual just should be paying the tax with a higher percentage as compared to, like, the lower income individuals. The percentage shouldn't be the same, it should be changed, because for the higher income you should have a higher percentage, right? Okay, then one point is we also have some taxation principles. Overall speaking, we have this progressive, regressive, proportional, and then we have ad, this is valorum, yeah, ad valorem principle as well, right? So these are certain taxation principles that we have over here, about which we are going to talk about as well. Now, progressive system, higher the income, the higher the tax rate. What we just talked about, right? The higher the income you have, the higher the tax rate you are going to have. The progressive system, mostly or majority of the tax system, majority of the tax system in the world, majority of the tax system in the world is based upon this system, right? Majority of the tax system is basically based upon this progressive system, basically, right? The way you have the higher income, you are going to pay the higher amount of the tax and all, right? Then we have the regressive system, higher income and a lower amount of tax. Now, how how do you have a higher income and a lower amount of tax? Like, the example for this is, you have an income of 10,000 pounds, right? Income of 10,000 pounds is earned. Now, over here, you pay tax on petrol at 10 pounds, right? And this tax of 10 pounds is paid assuming you get 50 liters of petrol over here, right? Now, for example, your income increases to 20,000 pounds, but still you are paying tax of 10 pounds, assuming you still need 50 liters of petrol, right? The regressive system is where, in the commodities, that it doesn't matter whatever the income level is, the amount of tax, this is remains the same, right? So basically the level of income is increasing, but your tax, this is kind of sort of decreasing as proportion to your income. This is what the regressive system is, right? In the progressive, we simply say that higher the income, higher the tax. But in the regressive, the income is increasing, but as compared to the income, the tax is decreasing over here, right? And then we have proportional system. In the proportional system, your income increases, but the tax remains the same. In the proportional system, your income is increasing, but your tax is same. And this is the rate of tax percentage remains the same, right? Like, for example, you are earning 10,000 pound and you pay tax of 10%, and that is 1,000 pound, right? Now, your earnings, they go to 20,000, but still you pay tax of 10%, and that is you are paying tax of £2,000, right? So the percentage in a proportional system, the percentage is same, right? The proportion in the proportional system, the percentage of the tax is basically the same. And so this is what basically the overall issue is over here in this regard, right? Okay. Then moving it from here, we have the fourth type now with us, and the fourth type is okay. The fourth type is ad valorem principles or ad valorem taxation over here. Ad valorem is you apply and calculate the tax based upon the goods or services you receive, that is based upon their value, right? And in this, we have the VAT, that is the value added tax. This is in the principles of the ad valorem, right? Ad valorem is basically the concept that we have for the VAT, that whatever the goods or services that you receive, right? For those goods or services that which you have received, you are going to pay the tax. Done? So this is what we have overall speaking for as far as the tax principles are concerned, right? Now, moving ahead from here, we have the tax authority in the UK been called as the HMRC. HMRC, if we talk about, that is the Her Majesty Revenue and Customs, is the government department that controls and administers all the areas of the UK tax law. Now, obviously, we all know we had a queen regime in the UK, like since after her death as well. It is still the departments are going with the same Her Majesty, although we have a king now in the UK, but still it's not His Majesty. The departments, they are still the same, and they are running with the name of the queen over there, and that is the Her Majesty Revenue and Customs, right? So the main purpose of the HMRC is to make sure that the money is available to fund the UK public services, for the UK's public services, right? It helps the main purpose of the HMRC is to help the families and individuals with targeted financial support as well. So if you are a UK citizen and if you are into a very low income level, or if you don't have a job or something, even then in that case, the UK government, it supports you, right? It supports you, it gives you the non-working allowance. There's a specific name for that. I mean, if you're not working, if you're unemployed, they give you the allowance for that as well, right? So technically they are supporting their people, that everyone has something at the end of the day, right? Now, heading up the HMRC are the commissioners whose main duties are. Now, first thing first, we have, this is the whole HMRC, right? This is the number one, the whole department. And then when we come over here on the second number in this department, if I try to draw the structure of the hierarchical, this is the HMRC. In the HMRC, we have the uh, administrations or the administrators who are administering this whole tax system, and they are called as the commissioners, right? So they come in over here. The commissioners are on number two over here, right? And their main duty is to implement the statute law and to oversee the process of the UK tax administration. So basically, what they are doing, they are administering that what is happening over there in as far as from the tax point of view is concerned, and then they are implementing the statute law over there in the UK as well, right? So these are the stuff that they are doing. And then after that, the staff who work for the HMRC are known as the officers of revenue and customs. So basically, apart from the commissioners, when we come down onto the third number, we have the the staff working as the officers. So after the commissioners, we have the officers of revenue and customs, right? And then the HMRC, they have the offices over here all over the UK, mainly many of which have specialist functions such as dealing with the international businesses or the large companies. So they have the sections over there in the UK as well. they have the multiple departments who are dealing with the multiple areas and all, right? For example, I mean, you have the officers over there who are dealing with the individuals. They are the ones who are dealing with the corporate clients, right? Or the corporate sectors and all. And then they have the officers who are dealing with the international businesses or the large scale of the companies as well, right? So they have the multiple areas of the multiple offices dealing with the multiple queries and all, right? So that is how basically they are going into this and they are covering up this whole aspect and area over here. Okay, then after this, overall speaking, most taxpayers will never deal directly with the local tax office, as HMRC encourage taxpayers to file the tax returns online, use their website, that is hmrc.gov.uk, to answer the queries on the telephone or the emails, or a number of specialist helplines, that is a self-assessment helpline. So normally, most of the taxpayers, when it comes towards filing their return is concerned, they do this online on the hmrc.gov.uk, and this is where they simply go and they file their returns. And if they have any sort of a query or something, they straight away simply have the self-test questions or self-test answers over there, right? So they use that as well, and then they have the other approaches and all, right? So they have the self-assessment helpline as well, where if they have the queries or something, they get the idea that what to do and how to do about that as well, right? And then obviously the taxpayers are encouraged to file their tax returns online and pay by electronic means. Companies have to file returns and pay tax electronically, and individual taxpayers can still send their returns and payments by post if they wish. For the companies, it's a compulsion to file their return and pay the amount electronically, but for the individuals, they have the option. They can do it online as well, and they can send it by the post as well, right? And then under the self-assessment, the responsibility for reporting the correct amount of the income tax or the taxable income and paying the correct amount of tax is delegated to the taxpayer to self-assesses. Okay. Now, the best thing is over here, when you are doing a self-assessment and all, this is your responsibility. This is your duty that you have to correctly calculate and you have to correctly pay your tax, right? This is going to be solely your responsibility at the end of the day, right? And it's assumed that you should have the knowledge, or at least if you don't have the knowledge, then you should hire someone from your behalf to do the proper calculations and then file the return from your for your behalf, right? From your behalf. And it's just that, like, we choose a random sample from the population. So the tax authority, what it do is basically it selects a random sample from the population, and they check their records at what and how they have filed their return, right? They do the assessment and all. And if there is some discrepancy or if there is some wrong calculation, then obviously they call you up for the investigation and all. And then obviously, if you have done a deliberate act or something, not even a deliberate as well, but still they charge you with some fines or the penalties as well, right? And now, officers of the revenue and customs can still be requested to do the calculation of the tax payable based on the income reported for the individual taxpayers, but not the companies over here, right? Again, the same point over here that we have read and we have talked about over here. And then, one more point that we have, that is the sources of the tax law that we have. And the sources of the tax law, basically, the basic rule of the UK tax system have been established from the following sources. We have the statute law and the case law. We have the statement of practice, extra statutory concessions. Then we have the internal HMRC manuals, detailed technical guidance, and HMRC website leaflets and the booklets. So sources of the tax law, I mean, if you want to get an idea about what the tax law is or what this is going to be about or how we can use it or see it and all. So for that, by default, you have the statute law with you. Now, obviously, this is a law, and therefore the adherence or compliance is mandatory, right? Now, the tax legislation is normally updated each year by one annual finance act that follows from the proposals made by the Chancellor of the Exchequer in the annual budget statement. So, whenever there is an annual budget statement, there is going to be a new finance act that you have to follow. Now, the statutory instruments are issued whether detailed notes are required on an area of tax legislation. Obviously, where the new rule is over there, the explanatory notes or the statutory, they are going to issue their explanatory notes regarding, how to deal with this or what to account for or what to look for, basically, right? Then we have some case laws with us, and the case law it refers to the decisions made by the judges in the tax cases brought forward before the court as well. And obviously, the cases over there in the tax law normally they are challenging the current tax rules or the interpretation of the rule, and there are arguments related to the interpretation of how the tax law should be applied or how the it should be understood as well in order for as far as the application is concerned. Nah? And now, whatever the decision is, the rulings of the court basically they're binding and therefore they provide the guidance on how to interpret the tax legislation as well, right? So they are giving the guidance as well that if you have to interpret it at the end of the day, how can you do so? Right? Then we have the HMRC guidance as well regarding this. Obviously, the HMRC is providing the guidance about this as well. That if you have a certain legislation, or you have if certain legislation are complex and you are unable to understand them properly or something, and if the tax authority feels like that they can be misinterpreted or something, then obviously they issue or they provide with the guidance, or the HMRC issues the guidance regarding how to understand and what is the basic interpretation of any new law if it has been there, right? So basically they are explaining how to implement the law, how to give the interpretation of the law, and then how to go for as far as the type of the guidance, basically, right? In the type of the guidance, basically, obviously we have this statement of practice with us, and with the statement of practice we have the extra statutory concessions as well. We have the internal HMRC manuals, we have the HMRC website leaflets and the booklets as well, which are basically giving us the guidance. They are technically telling us, and they are letting us know that how to understand it up and how to have its idea and all, and how to interpret it overall speaking. As far as the detailed technical guidance is all about the interpretation of the tax law and everything is concerned, right? Okay, now moving ahead, if we talk about our course now, and if we talk about in relation to the Kaplan book as well for the tax, the topic of the income tax that we have, this is going to be the tax applied on any income earned. And any income earned can be from the investment income, it can be from the employment income, it can be self-employed, it can be property income, and it can be pension income as well. And this income tax, this is going to be covering around 9 to 10 chapters. It is going to cover up around 9 to 10 chapters of your book as far as for the income tax is concerned, right? So this is a major chunk of your course, basically, overall speaking, right? On the second number, we have this national insurance contribution, that is the NIC. And in the NIC, we are going to have it payable by employees on their earnings, and the earnings which are if beyond a threshold they have to pay, and then payable by employers on the earnings of employees, right? And if they are beyond a threshold they will be paying, right? And then similarly they are payable by self-employed on their earnings if they are beyond a threshold as well, right? Okay. And if we talk about the national insurance contribution, we are going to have one chapter. We are going to have one chapter around overall speaking in the book related to NIC. Then we have capital gain tax. In the capital gain tax, if we talk about, this is something which is payable by individual, payable by companies as well, right? And in this, we have the disposal of assets, like for example, we can have the land, building, shares, antiques. So they'll come over here, right, in the capital gain tax. And in capital gain tax, we have like around 2 to 4 chapters covering up the area, right? So 2 to 4 chapters are over there, which are going to cover up the area for the capital gain tax. Then we have inheritance tax. Inheritance tax is basically payable by the person or the executor appointed by will or designated by any court that the person is responsible for disposing of the state of the dead person or individual, right? So that is where the inheritance tax is basically, and this is going to be also payable on certain gifts as well. The inheritance tax is payable on certain gifts as well, and the gifts which can be, I mean, you can get a gift, it's called as a lifetime gift. It can be inherited in case of death of any individual as well. So it can be inherited in case of the death of any individual as well. So it's going to be there. As far as for the inheritance tax is concerned, we are going to have one chapter, right? And then we can have a corporation tax as well. Now, the corporation tax, if we talk about, this is something which is payable by companies only on their earned profits, right? So the corporation tax is something which is payable by companies on their earned profit. And we are going to have like around what, 6 to 7 chapters over here, right? And then we have the value added tax as well. And this is something which is payable by consumer of goods or services, right? And consumer as the end user that we have. And if we talk about the chapters over here, we are going to have around 2 chapters that we have to cover up, right? So this is all about as far as your whole course and everything is concerned, right? Now let's just take a break of maximum 4 or 5 minutes. We are going to come back and then we are going to resume and we are going to formally start this up, right? Let's just have a break, maximum 4 or 5 minutes, not more than that. Okay, I'm back. So let's resume now. Okay, there is a little interesting concept. Let's just talk about that first. And that is, there is a concept called as tax avoidance, that is legal means of avoiding tax. And then there is tax evasion, that is illegal means of avoiding tax, right? Now, tax avoidance is the legal means to reduce or avoid your tax by using the tax rules for your own benefit. Like, for example, you have a rental property whose rent is £10,000, right? Now, your income level or your income over here on that property. Okay, you cannot hear me properly. Let me just check. Uh, everybody else, can you guys hear me properly? I mean, if somebody else is having the same problem, because my connection is properly running at the moment. Uh, Ms. Joshna, can you hear me properly? Rambazai? All clear on my side. Okay. And what about anyone else? Because my connection is running at full. Okay, you can hear me properly as well. Miss Anisha, please check yours as well because from my side it's working properly. Okay, Mohammed is working well. Okay. Now, the rental property I was saying, say in case our income is okay. The income is 10,000, right? And we have a flat 10% tax rate because of which over here we have to pay a tax of 1,000, right? Okay, right? So we have an income of 10,000 over here on which we have a 10% tax. So according to that, we have to pay a tax of 1,000 over here, right? Now, we have another means by which what we can do is, say in case if the property is if I own the property and I have my spouse with me as well, I have an option available with me in which what I can do is I can show the rental income equally divided between me and my spouse, right? Now, say in case if it's not me, if it's Mr. A and B, right? This is A and this is B. This is A, this is B. Now, what happens? Now, what happens? Uh, the rent equally divided 5,000 over here, and then equally rent 5,000 over here. Now, as my income drops to 5,000, the tax rate is dropped to 5% as well. So technically, I have a tax of 250 over here, and I have to pay a tax of 250 over here. Now, what happens? I will be paying a total tax of 500 if I spread my income between me and my spouse, right? So by that, my rental income drops to 5,000. I have to pay the tax of 5%. And then eventually I will have to pay the tax of total 500 over here. So what will happen if I distribute the income between me and my spouse, my tax drops to 500. So technically, by the option, the legal option which is available to me from the tax authority, I can easily save my 500 of the tax amount, right? This is what the tax avoidance is, right? Now, tax evasion, this is the illegal means of avoiding tax by means of misinformation, right? Or misstatement or withholding information. Like you are earning you're earning 15,000 pounds and you are hiding this from tax authorities. Like, for example, you're earning 15,000 in the name of the earnings, in the name of the rental income, and you are hiding it from the tax authority. Just give me a second, please. Okay, like for example, you're earning 15,000 and you are hiding it from the tax authorities. You are not disclosing it to the tax authorities. So this is what basically the tax evasion is. And this is illegal. It's not allowed, right? It's not allowed. Done? Now, if we talk about the income tax, if we talk about the income tax, that is any tax which is payable by a UK resident, that is an accessible person, during a tax year on their income. Now, first thing first, we have this first thing over here, and that is the UK resident over here, right? Now, for the resident, this is the residency which we have to see. If resident of UK, if you are a UK resident, you are going to pay income tax on their worldwide income, right? If the residency test is met, if the person is a UK resident, he is going to pay the tax on their worldwide income. And then if non-resident of UK, right? If he is a non-resident, then in that case, he is going to pay income tax on income earned in UK only, right? So that person is going to pay the tax on the income which he has earned in the UK only, and whatever the worldwide income that person has, it's not going to be taxable over there, right? And then the second point is the accessible person. Now, accessible person, if we talk about accessible person, accessible person means the person who needs to pay the tax, right? Accessible person is the one who needs to pay the tax, right? Now, the person, the individual over 18 years, right? It can be a married couple, right? And it can be the children as well, right? So the accessible person, they can be the individual over 18, they can be the married individual couples, and then they can be the children's as well, right? And then we have this tax year. Now, the tax year, I mean, as already discussed, this tax year, it starts on 6th April and then it ends on 5th April next year, right? That is going to be the tax year over here. And now, if we talk about hours, like for example, this one currently, it has started on 6th April 2024 and it is going to end on 5th April 2025 over here, right? And this is going to be called as the tax year 2425 over here, right? This is what the tax year is. Done. And then lastly, we have this income thing over here. Now, if we talk about the income can be a saving income, it can be a non-saving income, it can be why is it not showing? Saving income, non-saving income, dividend, and then we have exempt income over here, right? So this is what basically we have the in relation for as far as the income is concerned. Now, we did happen to see this definition of the income tax over here. Any tax which is payable by a UK resident. In the UK resident, we came towards the residency and we said that if it's a UK resident, he has to pay the income, he has to pay the tax on his worldwide income. And if he is not a UK resident, that is not going to pay the income. He's only going to pay the tax on the income which is earned in the UK, and rest of the income we are going to ignore that, right? Now, let's just formally start this residency thingy over here. Residency. UK resident pay tax on their worldwide income, right? Okay. And then we had this non-resident is not part of your syllabus, right? So non-resident is basically not part of your syllabus, so you don't have to worry about how the computations are going to be or what the computations are going to be, okay? And in order to establish the residency of a person, HMRC has given you three tests, right? So in order to establish the residency of a person, HMRC has given you three tests that we have to see. Now, test one, that is automatic non-UK residency test. Okay. Test one, that is automatic non-UK residency test. Now, if test one is pass, right? If test one is pass, simply the person is going to be regarded, or the individual is going to be regarded as a non-UK resident. Okay. So automatically, if you pass the test, then it means you are qualified as a non-UK resident, right? Now, if test one is negative or not clear, right? If the test one is negative or it's not clear, then move to test two, right? So if test one is negative, it's not clear, then you're going to move to test two. Now, uh, if I try to show you with the help of a flow chart, I can do so. Okay, let me just create it up. Okay, so here we go. Here we go. This is test one. This is automatic non-UK resident, right? And it can be yes, it can be no. And if it's no, then you have to move to test 2, right? And here we go. This one here, this one here, and then again, this one is here, right? Now, we have graphically talked about the test 1, but what is a test 1? Test 1, a person is non-UK resident if they means if he or she lives in the UK during a tax year for less than 16 days. If it's 16 days, that is straight, no questions asked, non-UK resident. I mean, you go on to a business trip to the UK and you just lived over there for like around 13, 14, 15 days, right? You are going to be automatically a non-UK resident, right? You went to the UK and you lived for 46 days, right? Then in that case, you have to see that was the person a UK resident in last 3 years? Was the person UK resident in last 3 years? I mean, if you have stayed over there for 46 days, then you have to see that if the person was a UK resident in the last 3 years. Now, the answer to this is going to be either yes or either no. If the answer is yes, then you have to move to test 2. And if the answer is no, then he is or that person is a non-UK resident, right? And the third one is for 91 days. Now, for 91 days, has the person working, has the person working full time overseas? Now, the answer to this is yes or no. Now, if the person is working full time overseas, yes, he's a non UK resident. If the person has not been working full time, then you have to move to test 2, right? So the simple rule is that we have these 3 areas. One, if the person has just lived for less than 16 days in the UK, he is automatically non-UK resident. If the person has lived in the UK for like around 46 days only, then you have to assess that was the person in the UK in the last 3 years. If yes, then you have to move to the test 2. If no, then he is automatically a non-UK resident. And then the third point is that if the person has lived in the UK for the 91 days or something, so you have to see that has the person working full-time overseas. If the person is working full-time overseas and he's just over there to meet his family or something, and then he's going to go back, then automatically he's a non-UK resident. And if he's not working full time in the overseas, right? So in that case, if the answer is no, then technically speaking, you again have to move to the test 2 over here, right? So this is what we have regarding as far as the test 1 is concerned, right? Then on second number, we have test 2. Now, test 2. Test 2 is basically automatic UK residency test. Test 2 is automatic UK residency test, right? Now, if now we have to insert some boxes over here in order to understand it completely. Okay, so let's have the boxes set first. Then I am going to show you what does it say. Okay, and then we have this line. With this, we are going to have this line here. We have, here we go, and then here, and then we can have it here and here, and then we can have it here as well. And then this one is here. This one is here. Okay. Now, if test 2 is in UK, if the person has lived in the UK for at least 183 days. If the person has lived in the UK for 183 days, then automatically he is going to be a UK resident, right? Like, for example, previously we saw that if he was working for 16, 9, 46, or 91 days, he was over there in the UK, so he was automatically non-resident. Now, for the UK resident, it's simple. If he has lived in the UK for 183 days, then no questions asked, he's a UK resident. That's it, right? So if he has lived in the UK for 183 days, he is going to be called as a UK resident. Similarly, if he has his only home or house in UK, nowhere else, right? If he has his only home or house in the UK, he is going to be a UK resident. And if he is working full time in UK, if he's working full time in UK, he is going to be a UK resident. So technically, if you have lived in the UK for 183 days, if you have your only home in the UK, or if you're working full time in UK, then you are a UK resident, right? And if you are unable, if you are unable to clear, right, regarding the 183 days only home or working full time, then what you're going to do is you're going to move to test 3, right? Done? Okay, done. Now, if this is unclear, we can simply say, like, for example, we have, who do we have over here? Okay, we have Miss Anisha over here. So I can say Miss Anisha, right, lived in UK for 150 days, and she owns a house in Mauritius, right? Now, if we talk about this one, this is a question. Miss Anisha lived in the UK for 150 days and she owns a house in Mauritius. So technically, is she going to be called as a UK resident or as a non-UK resident? Because if we go over here from the test 1 point of view, she has lived for 150 days, right? It's not 16 days, it's not 46 days, it's not 91 days. It's 150 days. So technically, it's more than these days. So we are into the test 2 for the automatic UK residency. But she has not lived for 183 days, she has lived for 150 days. So technically, this point is not met. Her only home is in the UK, but she has a house in Mauritius. She doesn't have a house in the UK, right? And if she's working full time in the UK or not, now this line is not clear in over here in this line, right? So she lived in the UK for 150 days. She owns a house in the Mauritius, right? Nothing more, no more information is like, given to us over here, right? So if no more information is given to us over here, then technically speaking, this scenario or this point we are unable to clear, we are unable to judge, we are unable to get an idea that what the actual story is or what the whole story is, right? So for because of this reason, we now have to move to test 3, right? So now we are going to go into the test 3 over here. Okay, now test 3, this is called as the ties test, right? This is a ties test, and this is the comparison between number of days living in UK or ties within UK, right? This is going to be the comparison, like, of the number of days that you have been living in the UK or the ties within the UK. You are going to talk about this one as well, right? Now, for example, we can have the family ties. Family ties is close family members are living in UK. So close family members are living in UK, right? Like for example, your your spouse is there in the UK, your civil partner is in the UK, or your minor children are in UK. So you say that you have certain family ties over there. Similarly, you can have the accommodation in the UK, right? And when we talk about the accommodation, that is, like for example, do you have a house in UK, or you know you use that house to or for living in UK during a tax year, right? So this is a tie as well. Then you have substantive or substantial work or substantive working in the UK, right? So if you have substantive work in the UK, so like for example, you had 300 days of work, right? You total had 300 days of a year as a working days, right? And out of those 300 days, you spent 200 days working or worked in UK. Then this is something we say you have substantive working, like, in the UK, right? And then we have the days test over here, and that is if you have spent more than 90 days in either current tax year or both tax years, right? In the UK, that is in current and last in the UK, right? So that is going to be called as the number of days test over here. Just give me a second. Okay, I'm back. So let's assume now. So we have this number of days over here, and then we have another point, and that is for the country. And in the country, basically, you should have spent more time in UK than any other country, right? Okay, okay. And this is MORE. Now, if we talk about this, more, we can have another table. Let me just open up the table for you guys. Open recent is this one. Okay. I'm just opening up this file just to give you an idea, the residency status basically. No, this is not the one. Let me just, where's the file going? Why is it not opening? This is F6. And here we go. Just 1 second only. Okay, so individuals leaving the UK and arriving in the UK, the answer is simple: determine the residency status of the individual. Consideration is given to the automatic non-residency, UK residency, and UK residency tests. And if none of the automatic tests are met, then how many of the sufficient tie tests are satisfied together with the number of days spent in the UK, as shown in the table below. Now, if you have spent 16 less than 16 days in the UK, it doesn't matter if previously you were a resident or not, right? You are going to be automatically non-resident in the UK. That if you have spent only 16 days in the UK or less than 16 days in the UK. Now, if you have spent 16 to 45 days in the UK, right? If you are a previously resident, then you have to meet the 4 UK ties or more, right? In order to classify yourself as a resident. And if you have lived in the UK from 16 to 45 days and you were not previously UK resident, you are automatically not a resident over here. Now, we had this question over here for Miss Alicia, that if she has lived in the UK for 150 days and she owns a house in the Mauritius. Now, let's just go over here, 150 days. This one is over here, 150 days is over here. Now, the first question comes in, was Miss Anisha was a UK resident in the past 3 years? In the last 3 years, was she a UK resident? If she was, then only one tie has to be met, and that is if she has some family ties over there, her close family is living over there. She has a house over there in the UK. No, she doesn't have a house in the UK. She has a house in the Mauritius. And then if it's a substantive working, that if she was in the UK for 150 days, right? So technically, she hasn't she can't meet this one because 200 days worked in the UK now. So technically, it's not gonna be over there. One tie is met. She has spent 90 days in either the current tax year or both tax years in the current and the last. So consecutive 90 days if we have been spent over there and spent more time in UK than any other country. So we have to see out of the 365 days, if she has spent more time in the UK, then she is going to be classified as a UK resident. Now, if we talk about this 150 days, she has to meet two UK ties. If two UK ties are met, right, then she is going to be classified as a resident now. Now the issue is, she has spent 90 days or more than 90 days in the current tax year or both tax years. She lived in the UK for flat consecutive 150 days. So this one tie is met, right? If she was in the UK for 150 days, so technically speaking, this one test is met. Now, apart from that, substantive working is not met, accommodation is not met. Now the question comes in, does she has a family ties over there? If the answer is yes, right, then she can be regarded as a UK resident. But if there's no family, then we have left with this one only, the country. That is, if she has spent 150 days in the UK and then The remaining number of days in the year she has spent in other multiple countries. She has spent other in other multiple countries, and the number of days in the UK spent are going to be more than the number of days spent elsewhere. Then in that case, this is something which is going to be classified as a UK resident, right? But if she has spent lesser days, or she has spent some more days elsewhere as well, or she came back to the Mauritius after spending 150 days over there, and then she spent her whole time over there in the Mauritius, the rest of the year was being spent in the Mauritius, then this tie is not met and she is going to be non-resident over here, right? Now these rules make it more difficult for someone leaving the UK to lose UK residency status than it is for someone arriving in the UK to remain non-UK resident over here, right? So these are the residency, the tests and all over here as well, right? Now, let's just take a look at another example as well in order to understand how the tests and everything is working over here, right? Now, this is explain whether or not the following individuals are resident in the UK in the tax year 21-22 or not, right? So we have these residency tests with us, which we have to see, and we have to talk about if the tests are being met or not, and then we are going to evaluate these one as well, right? Okay, so the first one, I mean, if we talk about, this is the Dieter who was born in Germany. He has lived in the UK in his hometown in Germany until the tax year 21-22, when he came to the UK to visit on 10th June 2021 until 18th January. Okay, so Dieter is born in Germany and he lived over there for the whole time. This is the first time he came to the UK. This is the first time he came to the UK, right? And now he came to the UK on 10th June 2021 until the 18th January. So, how many days he has lived over there? From 10th June, technically, for the month of June, this is going to be what, 20 days? Then from July to December, from July to December, this is gonna be what, 180 days over here, right? 6 months, July, August, September, October, November, December. Yeah, 6 months into 30 days flat. That's gonna be 180 days. And then in January, he has lived for 18 days over as well, right? So 20 plus 180 plus 18 is how many? That's going to be 218 days, right? Almost 218 days. Now, almost 218 days. So, technically, if he's been living over there for 218 days, that is for more than 183 days, he is going to be automatically a resident over there. So Dieter, who went over there on 10th June and lived over there for 18th January, he is going to be classified as a UK resident from the tax point of view, right? Then, Simon Liv was born in France. She has lived in her UK, she has lived in her hometown in France until the tax year 21-22, when she came to the UK to visit for a month. Okay, she came over here, right? And she came over here just for a visit for a month over here, and she has been not been a resident over here now. So automatically, not previously resident. If the visit is for 16 to 45 days, 30 is gonna be over here in between, then automatically she is not a resident over here, right? Because she went over there in the UK for a visit for a month. She has not been previously to the UK as well. So if this is the case, she is going to be classified as a non-resident over there, right? And then we have the third point over here. Before moving on to the third point, I have to copy the rest of the question over here as well. And here we go. Now, Fred has always spent more than 300 days in the UK and has therefore been the UK resident. He gave up the work on 5th April 2021, and on 18th May he set off on a round the world holiday. He did not return to the UK until April 6th. Initially, he spent 5 weeks in his second home in Portugal, but then did not spend more than 10 days in any other country while he was away. While he was away, he kept in touch with his wife and young children who remained in the family home in the UK. Okay. Now, if we talk about the Fred, he was previously a resident, right? Previously a resident, right? And then apart from that, if he was previously a resident over here, then we have to see that how many days has he spent over here. He gave up the work on 5th April, and then on 18th May he left. Now, so 30th April, these are going to be 25 days for April, 25 days for April, and for May, these are 18 days, right? So total 25, 35, 40, 43 days, right? So total he lived in the UK for 43 days over here, right? So technically, if he has lived for more than 40, what, 43 days, okay. So we are going to be over here, right? He was previously resident, so automatically he's not going to be not resident, he was resident. So if he has lived, for four UK ties have to be met. Four UK ties have to be met over here. So if we talk about the four ties have to be met, right? So technically speaking, let's see. He has kept in touch with his wife, young children. So technically speaking, first point, this one, family ties is met, family home, the accommodation is met as well, right? Number of days more than 90 days in the current tax year or both the tax year. Yes. So number of days is being kind of like, met as well. Spend more time in UK than any other country. This is met as well. So one, two, three, four. Four ties are being met over here. So four ties are met. So 43 days, if four UK ties or more are met, yes. So he's going to be regarded as a resident over here, right? Because he went to Portugal, but he stayed over there only for 10 days or so. So he only stayed over there for 10 days or so. So technically speaking, if he is meeting the four ties, right? The four UK ties are being met over here, then technically speaking, he is going to be regarded as a resident over here, right? Then Olga, a housewife, has previously visited the UK on holiday for 30 days in each of the last 5 years and was not UK resident in those years. On 6th April, she purchased a holiday cottage in the UK. In the tax year, she visited UK for 80 days, staying in her UK home apart from 2 weeks when she stayed with her 17-year-old son who had come to the UK for study. For the remainder of the year, she lived in her home in Germany. Okay. Now, Olga, the housewife. Now, technically speaking, if she has spent 80 days, so automatically from the category of non-resident, she's out. She can be in the category of the residents over here, right? Now, if we talk about, this point over here, but she has spent 80 days, right? So we are over here, 80 days. So three UK ties have to be met. Three UK ties have to be met for previously resident, but she was non-resident. So four UK ties have to be met for her. Four UK ties. She has a family, the son over there. She has a holiday cottage over there, which she bought. Um, yeah, she bought a holiday cottage over there, right? And she stayed with her son. And what else? Uh, yeah, number of days have been spent in the UK are for in between the 46 to 90. Now. So technically, four UK ties are met. who have to be married, but she has a son and a cottage over there, nothing more. So two ties. So she is not going to be a resident, she is going to be a non-resident over there. So she is going to be classified as a non-resident over there. Done? I hope it's clear to you. So this is how, I mean, we are going to have it over here for now or for the day. I hope it's clear to you. Meanwhile, if you have any question or something, you can ask me. Otherwise, I'm going to hold it up over here for the day. It's more than enough for now. And obviously, I don't want to push more over here on the very first class. If you guys have any question or anything, you can ask me. Otherwise, we are done for the day.
Hello, my name is Ume. Later on, I was unable to introduce myself. It was the first time I have joined Hamza Academy. I have just completed my level 1 ACCA. It's my
Okay.
first paper for level 2. My question is, will you give us these notes, like the PDF thing?
Okay. Okay.
Y-
Okay. Okay. Yes, Mr. May. The thing is, I was discussing about this, that these Word files, they are going to be uploaded onto the Academy's portal as well. I mean, the same very portal where you are going to access the video lecture, na? Right under the video lecture, you will be able to see the Word, and later I will be creating the Excel files. You will be having an access to the Word and the Excel both files, right? And they will be labeled over there as lecture 1, 2, 3, whatever the lecture is. They will be labeled with the lecture number and the date as well, right? So you will have an access to these, because these are the summarized ones that I have over here, right? And to be honest with you, maybe you guys will get a bit of a surprise or something, but we have completed two chapters from the Kaplan book. We have completed, we are done with the two chapters from the Kaplan book. Okay. This example test your understanding 9, this was taken from the exam, from the Kaplan book as well. I took this example to have a discussion over here, right? So the books and the exam kits, as I told you earlier, I will providing you with the books and the exam kits as well. Now with the tax, this is an inherent limitation that obviously the Finance Act is going to come out in the March, right? And the latest Finance Act which comes out in the March, that is testable and applicable in the June attempt, right? So for now, we will be reading the previous Finance Act, but as soon as the latest one is out, we are going to apply that percentage over there in our questions as well. So technically, for the June, this is an inherent limitation that normally the latest updated books and kits are not as such available on a real time. But after March or April, we can expect to find the books online. So I will be keeping an eye, and I'm already keeping an eye on those. As soon as I get my the latest one, I will share with those share those with you as well, right? I will be creating the WhatsApp group is going to be created by the academy, but I will be sharing a Google Drive link or via the WhatsApp as far as the book and the exam kits are concerned. I will be providing you those as well, right? So you will have an access to those as well, right? And these notes,
Okay, thank you.
yeah, no problem, no problem. These are going to be provided to you as well, and they will be available on the Academy's portal as well. Remember again, I am reminding you guys, the secret ingredient for the success in tax, apart from the practice, practice is really very vital. Apart from that, the second point, especially in tax, that is reading. It's really important, okay? So you have to be on your toes when it comes towards the reading. Okay. I will ask the coordinator to create the this WhatsApp group earlier, before our next class, so that by maximum tomorrow, day after tomorrow, when it's created, I'll straight away share the link so that you guys can have an access to the book, so that when you come to the next class on the Sunday, at least you must have read something from the book, right? Because remember, when you are going to read the book, most probably you might be having some more questions to ask from me, right? So you can straight away either ask me onto the WhatsApp, or when I come in the next class, you can ask me. And believe me, you can ask me as much as you want to. as much as you want to. It's not that if we have a class of like 2.5 hours or something, it's gonna be for 2.5 hours. If I have to extend the time, if I feel like I have to extend the time, I'll stretch the time. But it's just that today is the beginning, today is the first lecture. So I don't want to overwhelm, I don't want to push it to the limits or something. So that is why I'm just keeping it to the normal limit, right? So if we have to extend the time, we will. You can ask so as much as questions you want to. I will be more than happy to, like, guide you and assist you, and, like, take you along as you guys want. Okay, so this is all going to be from my side for now. If you guys have any suggestion or anything to say about today's class or something, you are more than welcome. Otherwise, we are done for the day. If you feel like that you can give up advice or something, like what we can do more to make it more interactive, or to make it more, like, interesting and more understandable, you guys can share with me. Any suggestion, more than welcome. Nothing? All okay? Okay, at least tell me if it's okay. At least I'll be having an idea if it's okay from your side. Okay, all good. Okay. Yes, it's okay. Okay, done. Okay. Okay, it's a relief to see that everyone is happy the way we are going for now. So it's time to say bye. You have to take care of yourself, your family, your friends, and the people around you. I'm going to see you next week. Same time, same place, same channel. Till then, take cares. Bye bye.